Hello and welcome to Biz First Review 360, where we bring you a roundup of this week's top business stories and developments that impact the economy. I'm Stephanie Lazarus. Top on our list of stories today, the government is looking to hire a US-based management consultancy group to help boost capacity of institutional mechanisms to facilitate accelerated economic development.
A proposal by Prime Minister Ranil Wickremesinghe to hire global management consultancy from McKinsey and Company at a cost of $2.3 million to set up a central management unit that will monitor and support economic reforms and the government's accelerated economic development program has received cabinet nod. McKinsey is expected to set up a Malaysian-style central program management unit to accelerate program management operations and build capabilities of key officers of the unit, review and prioritize existing economies' initiatives based on their impact. The Central Program Management Unit will operate under the new Development Bill, which will be presented to Parliament soon. The law is aimed at facilitating integrated and accelerated economic development across the country and restructuring and transformation of the country. McKinsey's core leadership team will comprise of 4 leaders from various McKinsey officers with experience in country transformation, delivery methodology and knowledge on Sri Lankan context and topics of national priority. Global experts including Peter Ho, former head of civil service in Singapore, and Nika Gilori, former Prime Minister and Finance Minister of Georgia, could be tapped.
Sri Lanka hopes to begin talks with India on building a liquid natural gas plant in Trincomalee in place of the controversial coal power station that was scrapped this week.
With pressure building against coal-powered electricity owing to health and environmental concerns, the government announced that it would not pursue the 500-megawatt coal power plant in Sampur, Trincomalee. The project could have been a 50-50 joint venture with the Ceylon Electricity Board and India's National Thermal Power Corporation.
The government has decided not to have a coal power plant in Sampur, considering various factors, including the tourism, other economic development, and so on and so forth. But it doesn't mean that we will not have any other power plant, like LNG, maybe solar or something, and any other power plant can be having in the Sampur. And only Sampur area will not have a coal. But in future, we have assigned this job to an expert committee to study all the possible coal options for Sri Lanka and consider all the social group opinion, everything. And once this expert will recommend, the government will decide whether the Sampur power plant will be converted to LNG or in any other place we will have the LNG power plant to meet the power demand. But the change in Sampur power plant doesn't mean we stop all the power generation project. We will continue to generate power in other places like Hambantota, Kalampu and other places. But that will be decided after this committee report.
The Ministry of Power and Energy says they hope to begin talks on a liquefied natural gas power station when India's Power Ministry Secretary visits Sri Lanka as part of a joint working committee.
We have a CEB and I have been in discussion with the engineers and they have pointed out to me that there is a substantial additional cost if we switch to LNG. Whereas LNG is much cleaner, less environmental pollution on one hand, on the other hand there is a substantial cost. For example, if we convert the 500 megawatt coal power plant to LNG plant, equivalent LNG plant, they have pointed out to me there will be an additional annual operating cost of 10 billion rupees, which has to be paid by the customers. So they say, so we have pointed out this to the government, and the government has appointed this committee based on those facts, so that they will look in all angles, weigh the environmental impacts, cost of that against the price we have to pay, and accordingly a decision will be taken.
According to the government, the CEB could still build a LNG plant with India's NTPC and include a third firm with LNG expertise to join in. In the meantime, the government is expected to call tenders to build a 300 megawatt dual fuel combined cycle plant shortly to avert a possible power crisis in 2018 from a delay and cancellation of the Trinco coal power plant.
Segment society believe Sri Lanka should go for 100% renewables. We should stop all the oil and they genuinely believe we have to do. Some groups say no, we cannot do this, we have to have a balance, 50-50 scenario. Within that 50, some group believe we should not do coal at all. Even though high tech, even though there are so many clean coal technology, some environmentally friendly technology, it doesn't matter. Coal is, no, they are pressurizing government. Some say no, we must look at the cost. Sri Lankan society is not a rich society, a poor society. Maintaining the low cost electricity is a key thing for economic development. If you want to bring the cost down, one of the criticism that we have in the past is the Sri Lankan power cost is higher than the region. There's a lot of pressure coming to chairman and the board and the ministry from the society to bring down the power cost, electricity bill. So in that case, maybe union is proposing. If really government want to bring the cost down, best option is go for LNG, coal and other low, cheaper cost thing.
VAT bounces back ahead of the budget. Let's have a look.
Shares were lowest at closing level in more than 6 weeks on Thursday as the government proposal to raise the value-added tax weighed on markets, Reuters reported. The government on Wednesday said the cabinet approved a proposal to increase the VAT to 15% from 11% with some amendments, a move halted by the Supreme Court earlier. The hike is expected to be implemented after parliamentary approval later this month. The benchmark Colombo Stock Index ended 0.31% weaker at 6,472.47, its lowest close since the 1st of August. It fell 0.34% for the week, its fourth straight weekly loss. Both the stock and foreign exchange markets will be closed on Friday for a holiday.
Some vital data on the health of the economy. Now that's coming up after the break.
අපේ සුන්දර බිරිඳ තවත් සුන්දර ලර්න.
ඔයා කැමති නම් මාත් කැමති.
මගේ දිහා හොරෙන් බල
කවුද කිව්වේ හොරෙන් බල?
ඒක දිග කතාවක්. ඌ කලබ ගෑනියක් කියලා තමයි විවාහ වුනේ. ඊ මම පොලිස් සම්බොලේ බත් කන්න හරියා.
ඒක විවාහ වෙනවා. අම්මා කැමති උන්නේ නැහැ නිලියක් සමග විවාහ වෙනවට පුතා. නමුත් පුතත් නළුවෙක්නේ.
පුතත් නල්ලෙක් වුණාට එයාට බය තිබුණා දැන් නළුවන්ගේ නිලියන්ගේ විවාහ ජීවිතය අප්සෙට් යනවානේ. කවදාවත් අවිශ්වාස කරලා නැහැ. ඔව් ඊටම හොඳ ස්වාමි පුරුෂයෙක් කියලා කියන්න පුළුවන්.
The Charming Wife, Sundara Birinda with Sydney Chandrasekhara, tomorrow at 11 a.m.
It's time to get to the serious business.
Today we are going against Prince of Wales Mall Tour.
If I wear a modern day Robin Hood, then ...
My team will give them a good fight.
Who came the first? Egg? Hen? But I know they were very delicious for my dinner.
TV1 Pentacle.
Sunday at 5 p.m.
Good governance, economy, transparency, politics, reconciliation.
Asking the questions that you want. Asking the questions that you want answered. Face the Nation every Monday at 9:30 p.m.
Welcome back. You are watching Biz First Review 360. I'm Stephanie Lazarus. On vital statistics this week, Sri Lanka expects budget deficit to drop to 4.7% of GDP in 2017 and unemployment drops to 4.2% in first quarter of 2016.
Briefing an International Monetary Fund mission in Colombo Tuesday, Finance Minister Ravi Karunanayake said the budget deficit is expected to drop below 5% of gross domestic product by 2017. The visiting team is in the island to review the progress of the $1.5 billion loan facility granted to Sri Lanka to support the country's economic reform agenda. New jobs created in the services and industry sectors have pushed Sri Lanka's unemployment down to 4.2% in the first 4 months of 2016 compared to the 4.7% recorded during the same period of 2015. The services sector has also created 155,638 new jobs, while the industry sector has added 72,273 new jobs. Meanwhile, the agriculture sector, which is grappling with low productivity issues, has lost 59,051 jobs.
The stand of the Public Utilities Commission, the regulatory body of the Ceylon Electricity Board, on adjusting the island's long-term power generation plan. Let's take a look at some of the excerpts of the interview.
The Public Utilities Commission says any alternative to the Sampur coal power plant has to be included in the CEB's long-term generation plan that needs to be submitted by April next year. Here are views of the Director General of the Public Utilities Commission of Sri Lanka.
In the 2015 electricity generation plan submission of CEB, after the consultation with the stakeholders, Commission has anyway directed CEB to look into the scenarios of LNG and the alternatives in the event of Sampur delay. So CEB has looked into those aspects in the recently submitted revised plan. With that, I think the 2017-2020 period we can sail through with new plants being included. But since now the Sampur particular power plant is no longer there, we have to revise the plans accordingly to accommodate that. Now in the CEB's new plans, an LNG plant of 300 megawatt is included. So that is a dual fuel plant where it could be run on either diesel or LNG. So the initial stages it will run on diesel and should come on grid around 2018. So with that 300 megawatts we can sail through the 2018-2019 period. Anyway, Sampur was due in 2021-2022 and now we move into 2021-22 with additional 300 megawatts of LNG plus so many renewable plants which are in the CEB's plan. So we have about 5 to 6 years to plan the next plant, which could of course run on LNG, and I think 6 years is a sufficient time frame to have an LNG plant. It is actually very difficult to predict. It all depends on the pricing of fossil fuels. We are unable to predict the fossil fuel prices. Everybody is in that position. So depending on the fossil fuel prices only the cost will vary. And if we can get renewables, then we can introduce some price stability into the system. Renewables may be slightly higher than some of the fuels in the running in costing at the moment, but in 2 to 3 years time it may be lower. As well as when we introduce renewables, it would be a flat or consistent tariff throughout. So that will introduce a lot of stability in pricing. Actually, CEB has planned around 5% demand growth, but the Commission has directed them to revisit the forecasting methodology and come out with a bottom-up tariff forecasting approach. So for the 2018-2037 plan, which is to be submitted by CEB at the end of April next year, they will look into all these new developments. I think by that time things would be much more clearer than right now. So they will look into all these and come out with a much more accurate forecast which could accommodate all these new developments.
What is a way forward for Sri Lanka's troubled plantation sector? Now that's coming up after this break. Welcome back. You are watching Biz First Review 360. Today on Speak Your Mind, we feature Prime Minister Ranil Wickremesinghe. And here are highlights of his speech delivered at the AGM of the Ceylon Planters Society.
If you are looking at rubber, the rubber prices are down. But on the other hand, our COP is high. If you look at tea, our markets are gone. But there are other countries who hasn't got that problem. Because too long did we focus on the Middle East and Eastern Europe. In the last 10 years, I remember as Prime Minister last in 2003, we said go out, look into Europe, look into America, looking at diverse products. I come back here and sit on that chair 12 years later and find that no one has gone down. In fact, everyone seems to have got onto the bandwagon. Russia is there, Ukraine is there, Syria is there, the Middle East is there. Now what have we got? That's where we sent our bulk, and bulk teas we went. Who is to blame? Someone will say the government, the previous government. Alright, are they the only people to blame? Did the totality of the industry say we want to move out? And on coconut we can't make up our mind whether we want coconut or whether we want oil palm. We are a small country with a limited acreage, with a big pressure on population. So either it's got to be coconut or it's got to be oil palm. How viable are we? Why is it that we cannot pay the wages that people demand? This is not only a problem of the plantation industry. Throughout Sri Lanka, 1.5 million people are employed abroad because they couldn't get the income they expected here. $300 to $400 per month. We can't, our industries can't afford to pay them. So this is reality. When first you have to work back on the wages to be paid. Now this is going to be a big shock for some of the companies which first look at what is the return that the stockholders are expecting. So you got to do another tool. Stockholders can get high returns, you will have no labor. So therefore you come back to the same game. Running away from one and you stumble upon the other. We will have, I think, about 10,000 acres of plantation crops will have to be cleaned up or taken out of plantation in the western province, part of Matara, Kurunagala, Kagalla and Kandy for industrial development. But I wouldn't like to write that 10,000 acres off. There are other parts of the country in which we can do replanting, whether it be coconut and rubber or tea. We started replanting in these areas. We started planting in these areas, but Western Province, Southern Province, and Kegol, Kagalla, and the rest of Wayamba are today fast developing into urban and suburban areas. Less members on the board know how tea is planted, and more know how to put a bag of tea and make a cup of tea. The regional plantation companies are necessary. I mean, the government couldn't take on the burden. So we had the regional plantation companies, and they've taken the burden off the government. Yes. But what has happened from there onwards? Some of them are really good plantation companies, I must say. Others are not. They keep changing on the stock exchange. And I had to pull up someone who said their first obligation for the stockholders. I said, no, it's not for the stockholders. It's for the industry. There are other stakeholders. And if you don't like, since we are changing policy, you can exit anytime you want. We won't keep anyone forcibly to manage estates. Recently we had an estate in which, plantation company in which, the members of the board of directors didn't speak to each other. A few are on the verge of collapse. So we have to make some changes, and those changes will come. Not for the sake of making a change, but how do we go? But we seem to be carrying the practices that we learned earlier times. But you would find in countries like North America, which are large farming, but also in countries like Netherlands, which has smaller blocks, a lot of new technology and management is being utilized, IT being utilized. The whole agro-business process from where you start till the end product. Now I think we have to give attention to that. And that's where I find the management of some of the RPCs also at fault. They're looking at how to cut costs. Some of them forgot the long term. When the going was good, they took the money and it went to the parent company. And when the going is bad, they come and tell us, you can't manage. That's another part of it, whether it be rubber or whether it be tea, that is a problem that they have. Now let's look at the product. What is the future of this product, rubber or tea, in another 10 years time, 15 years time? If you take rubber, a tea, can a high quality tea stand on its own? If we think it should stand on its own, how are we going to push it into the market? What's our promotion strategy? What are the other end products that will be there in another 10-15 years time? Other day by chance I was surfing through my iPad, I was on a web, and I came through. Tetley's had done what the future demand for tea drinks will be by 2025. So here are the two. Your high quality teas and what is the future demand going to be. Then how do you work for it? It's not merely a question of blending. That of your tea being infused with certain types of medicine. So if you have a headache, you just take that tea. So in Parliament, there will be a big demand for that type of tea. And if you have aches and pains, it's another type of tea. So these are things. The same thing with rubber. Where do you need high quality rubber? If you get the COP down. Coconut seems to be reviving on its own. Coconut drinks, coconut food. So we are just planting without looking at what the end product is. We look at the end product and then see how we can get the crop meaty. Our soil is, I think, another issue. We've been planting for over 150 years. How do we nourish our soil? How do we do our soil test? This is very, very important. Not only us, in many countries, they find that soil issues have come up. Others are tackling it, we are not. Then, research. I think we are discussing it. I am very unhappy with the research institute, so is the minister and others. But give us a good model of a mix where the public and the private sectors. It is a public institution, but how do we get the industry involved in it? Not just a person from outside, but people who are in the industry, involved in the development of technology. After all, the TRI and the CRI are very famous even today. So we have to pump in more money, but it must be based on the market and the demand. It can be demand driven. And that's where the other sectors of the industry come in. And look at the other crops that we can grow. I am not saying that we have to stick to tea and all. You may be having glass houses, other types of export agriculture. Why don't we look at it? Today, after the central highway comes in, from places like Kagally, it's just 1 hour to the airport. Or Kandy. With the Mattala airport, even the plantations in Ratnapura, Matale and parts of Bandaravilla become available for export agriculture. We have to think of. And finally, the question of managers and training. You talked of the remuneration and conditions of work, but what about your training? How good is it? Where are the planters trained now? Pardon? Huh? Yeah, so you have been trained in NIPM. That's in Kaduela. In the middle of the megapolis. Long ago there used to be a few estates. NIPM came there because Mr. MDH Jayawardena wanted it there. But you have to really think, is NIPM the answer?
So that's all the news we've got for you tonight. You can look us up on Facebook by typing Biz First Review 360. Enjoy the weekend and do join us next Friday at the same time. I'm Stephanie Lazarus. Good night.